Hi, this is Professor Karen Lin. In this video, we will discuss income statements. Income statement summarizes the manager or the company's financial performance for the period. Now remember, the balance sheet is about a particular date, which is as of December 31st, 2020, for example, from our previous video. In this video, when we talk about income statement, the period for an income statement is usually a year or quarter. Here is an example income statement. We still use La Nature's Inc. The title of the table would say the company's name, the statement's name, income statement, and you will see it's for the year ended December 31st, 2020, which means it's for the whole year and in millions of dollars. The structure of income statement is also classified. You will see the accounts are classified under revenues, expenses, and the final outcome is net income. An income statement usually starts at sales revenue or service revenue or whatever types of revenue the company earns. So sales revenue is the cash and promises received from sales of beverage, which is the main operation of this company. And then next to that is called expenses. Expenses are the resources the company spent to generate the revenue. For example, the company sells beverage, there is a cost of the beverage. So that goes to an account called cost of goods sold, which is the cost to produce beverage that's sold. Selling general administrative expenses, also called SG&A. SG&A are other operating expenses, for example, utilities, delivery, accountants, lawyers, and so on and so forth. Those are SG&A. And then other expenses includes interest expense. Interest expense are the expense that the company incurred when the company borrowed money from the bank or other creditors. So those are the costs of using borrowed funds. Using revenues minus all these expenses would equal to something called income before income taxes, which means this is the total performance that the company has, which is subject to income taxes. Using income before tax multiplied by the tax rate, we'll get the income tax expense, which is the income taxes on the period's income before taxes. So in this example, the revenue is $275.1 million. The expenses of this company includes the cost of goods sold, selling, general administrative, and interest expense. Using sales minus all these expenses equals to interest before income before taxes, multiplied by the tax rate equals to the income taxes, and the net outcome is net income. Net income is the final measure of a company's performance. It could be an income or loss. If it's a loss, it means the company has spent more money to generate the revenue. And if it's an income, which means the company makes a profit, which is mainly the purpose of why companies exist. The accounting equation behind the income statement is revenues minus expenses equals to net income. Again, revenues are the resources earned by delivery of goods or services. Expenses are the resources used or incurred to earn the period's revenue. Finally, net income is the net outcome of revenue and expenses. If revenue exceeds expenses, we have a profit or income. If expenses exceeds revenue, we will have a loss. These are the accounts similar to the balance sheet that belongs to the income statement. Basically, in the revenue section, you will see sales revenue, fees revenue, interest revenue, rents revenue, depending on what type of operations that a company provide. Under the expenses section, you will see all type of expenses and the cost of goods sold. For example, wage expense, rent expense, depreciation expense, insurance expense, repair expense, and income tax expense. These are all expenses. Revenue minus expenses equals to net income. But remember, in the previous lecture, we actually talked about two exceptions. Unearned revenue is not a revenue. Unearned revenue belongs to liability, and also prepaid expenses are not among expenses. They are assets. So remember these two exceptions. Otherwise, anything with a revenue in its name belongs to revenue, and anything with expenses in its name belongs to expenses. Cost of goods sold is a special form of expenses as well. Finally, let's take a look at Tesla. Tesla reports its consolidated financial statement of operation. Now, it's a different way of expressing income statement. So it's also in millions. Tesla reported 3 years of data side by side for comparison. You will see the revenue and the cost, and then some other expenses, gives you income before tax, and then tax and net income. So basically it follows revenue minus all the costs and expenses equals to net income. All right, this concludes the video for the income statement, and I'll see you in the next video for stockholders' equity and the cash flow.